Since June this year, the Bank of Ghana has cut its policy rate by some significant margin. If I'm right or my numbers are correct, more than 600 basis points. But have we seen a corresponding reduction in the lending rates when it comes to commercial banks? Recently, the governor of the Bank of Ghana met the chief executives of the commercial banks, and he made a passionate appeal to them for them to do more to respond to these cuts by dropping their lending rates. But let's flip the coin. Non-performing loans, they are still quite high. Are these push justified, or let's say maybe not placed well? Whilst we put in pressure on the commercial banks to reduce their lending rates, some people who have taken these loans are just not paying back. Well, on PM Express Business Edition, we look at the high non-performing loans and the sudden push by everyone that the banks should do more to reduce their lending rates. On PM Express Business Edition, I'm engaging the chief executive of the Ghana Association of Banks, George Wiafe, and he's my guest on PM Express Business Edition. So thank you so much, and thank you for granting us all day. It's been a quite busy month for you as CEO of the banks, right?
Yeah, of course, and thanks for having me.
Let's start off with the meeting that actually took place between the chief executives and the governor of the Bank of Ghana. How would you, it's a regular thing that you do, so it's not something that is out of the place, but how was the meeting?
Oh, I would say the environment was very cordial and quite refreshing. So far, our working relationship with the governor and his team has been very, very fruitful. Of course, it's not everything that we put on the table that gets accepted, but the fact that you get that actual feeling of being listened to has been a positive development, and we hope that the trend that we started from January to date continues.
In that engagement, what we had, what was open to the press, the governor made a passionate appeal to the commercial banks to do something about your interest rates. I mean, what do you make of this appeal? Because some would say that there are some inherent challenges, but the governor, knowing all these things, having been in this industry for a while, so openly made that appeal to the banks. How do you take that appeal or passionate request to do something about your lending rates?
I mean, one would not expect anything less from the governor. Obviously, everybody is interested in getting lending rates to levels that are more affordable, which will definitely also improve the loan profile, the quality of the assets. But we need to let the data speak for itself. The data does not tell us that rates are not coming down. In December of last year, average lending rates was hovering around 34-35%. Now we are speaking about 24% average lending rate. Average lending rate, which tells you there are customers who may be getting 26, 27, but there are some who may be getting 17, 18%, depending on their risk profile.
That's the Kobna Mensah that was so kind, having a very good profile, built a business for more than 20 years. He has access to that average lending rate of 24%.
It's about your profile, your credit, the risk premium that the bank assesses, or the risk that the bank assesses on your facility. So it's not a Kobna Mensah or a Unilever matter. It is what do we see, and the data that we have monitored points to not even gradual decline in lending rate, quite an aggressive decline in lending rate. Let me just put some numbers into perspective. Policy rate between January and the last round of review has declined 500 basis points, just about 505 basis points. Ghana reference rate has declined 1,182 basis points.
And help my viewers out in terms of the Ghana reference rate, what goes into it, and why the comparison here?
So the comparison is, people, when the policy rate is announced, then people begin comparing the level of decline to the Ghana reference rate, which is like the baseline rate. Yeah. Technically the rate below which a bank cannot lend. That is the Ghana reference rate. So unfortunately, the policy rate is not the only driver of the Ghana reference rate. There are other key drivers of that rate. We have the 91-day benchmark, which we have all seen has also declined quite steeply to below 10%. And then we have the interbank rate, which is also pegged to the policy rate. So wherever the policy rate hovers around, you find the interbank lending rate is also around, just around the policy rate. It is these three rates that interplay and adjusted for the cash reserve requirement that banks are supposed to keep at the central bank that gives us the Ghana reference rate. And as I said, the policy rate between January and October, we are in October now, has declined 505 basis points. Ghana reference rate has declined from 27.82 or thereabout to 17.86, which is 1,182 basis points. That is 11.8 percentage point reduction. So given that a significant, I would say over 90% of the lending in the country is benchmarked to the reference rate, it goes without saying that lending rate has declined. And that's why the central bank, from the MPC report, stated clearly that lending rate, average lending rate is currently around 24%, which is something that we saw around 35% not too long ago, which is almost taking the full weight of the decline in Ghana reference rate into the lending rate.
So I asked this question because about the fact that even though I know that for the banks, the assessment will be based on an individual or company, but how many people will get access to this? Because the argument is that sometimes these things are advertised, these are talked about. But when I walk into that banking hall for somebody who has been in business for 10 years, I have good books, I'm credit worthy, sometimes it's hard to get access to that advertised rate of about 24%.
If you have a good business, you have a good credit history, and your bank assesses you and finds that the project that you are undertaking is bankable, of course, yes. It has no color. It has no, whether he's tall or he's dark or he's short, it doesn't come into it. But it's just the records the banks are available to the banks is what is going to determine whether you get access and at what rate. The point is, policy rate can come down to 10%. We need to also work on the credit culture, the credit environment. So if policy rate is coming down, banks are lending, the mechanism for recovery through the established processes are not functioning properly, then you find NPL where it is now. Today, if a bank gives 100 Ghana cedis, they are potentially going to lose 20 Ghana cedis. That is your money. That is my money. Would you want a bank to just recklessly recklessly just lend because rates are coming down? Argument, or you want the banks to be very careful because they are trading with depositors' funds and ensure that they together work on the credit culture in a manner that sustains and also facilitates the credit sanctioning processes of the banks.
I get from you that the critical thing here is the credit culture, and now no longer inflation coming down, no longer treasury bills rate coming down, no longer policy rate coming down as a critical ingredient in reducing the cost of credit.
Because there's a layer beyond the Ghana reference rate, which is the risk premium. So Ghana reference rate is at 17.86.
Yeah.
So your risk premium could be 0.5%. My risk premium could be 5%, depending on how the bank assesses your credit or risk profile. That is what all of us must work together to bring down. So what I'm saying is this. I've already confirmed that the lending rate has declined significantly from upwards of 35% to 24%. And I am aware, because of the work we do here, we are not allowed to talk about individual bank situations. But you have monitored in the media space banks advertising lower lending rates come for loans. Why would the bank spend money to advertise if they are not ready to lend? So all you need is to take your documents, go to your bank, show them the profitability and the cash flow cycle of your business or your personal situation. The bank will assess you. And if they find you credible and your data confirms the assessment and evaluation, of course, they will look you and assess and definitely give you the facility at a rate that befits your risk profile.
So I asked this question because in the past, and maybe not from you, we got the understanding that inflation was high. We got the understanding that treasury bills was high. We got the understanding that, the policy rate was high, and all these things were making it difficult for us to lend at those favorable rates to businesses out there. All these indicators have dropped significantly. If you look at these variables, have we seen that corresponding drop in the average lending rate by these commercial banks out there?
I mean, maybe I should just restate what I said. There is no shifting or goalpost here. It is the same variables that we are all talking about. Inflation, market rates, and the credit environment. Every time we've had this discussion, I have always stated that credit environment is not favorable. The court system doesn't help. We have a Borrowers and Lenders Act that should facilitate easy recovery. But the court system has a way of accommodating miscreant borrowers who just use small loopholes that, in our view, I'm not a lawyer, but in our view, are more or less frivolous from origination. That you know that this guy is just trying to delay the recovery process from the bank. Those things have not changed. We've started working on, a few issues with the Chief Justice office. There's a new acting Chief Justice. We'll be reaching out to him. But we did a lot of work with the outgone Chief Justice, which we were expecting to begin yielding fruits within the commercial courts, the high courts, and particularly for commercial transactions. Because that is the only way that the translation effect can properly be reflected in the lending decisions of banks. But that said, the lending rate, because inflation is now 9.4%, TB rate is below 10%, policy rate is at 21%. These were rates that just a few months ago were very high. And that is why they come down, and that is why you see lending rates also coming down by more than 10 percentage points. It is possible. I mean, I just gave you an example that the policy rate between January and now has declined by 5 percentage points. The bank lending rate has declined by 10 percentage points. So we have actually outperformed the reduction in the policy rate, if you want to just link it directly to only the policy rate. But because there are other variables, and the variable that has drawn it significantly downwards is the portion of the TB rate within that equation, which has really, dropped down the Ghana reference rate to where it is now.
The governor was privy to all these things, and I'll ask again about why was he still making that call openly in the public that do more or do something about it? Having been privy to all these variables, did the governor still think that the commercial banks can do more?
The point is that you can't stop the governor from wishing that we could reduce lending rates some more. I mean, that is the job. The job is financial price stability, making sure that you understand. But obviously, we also work with data, just like the central bank works with data. And again, to correct you, it was not a meeting for the public. Okay. You understand? If you have some intelligence and you are talking to the intelligence, I did not really hear the governor pressing very hard.
Not pressing.
That banks no. It was more of
let's make that point
the governor saying that you see, the macro fundamentals are favorable. Let us let the public know that it is transmitting into their pocket. So he talked about it should result in job creation. It should result in lower lending rates. It should result in growth. So those are the three key pillars that he talked about. So the lower lending rate, actually, because he talked about three, I have a belief that he just added to the equation to make it complete, because the lower lending rate has already been realized because of the reduction from the 35% to 24%.
Let's look at the last time that they announced the policy rate cut. What has been, just the September one, what has been the corresponding reduction? I know the Ghana reference rate has come down. Have we seen the commercial banks again respond just what happened last month in terms of their lending rate or their interest rate to the public and the clients?
Yeah, there's always a few days lag between when the announcement and then the adjustment effect. We do not publish the Ghana reference rate maybe weekly, or we publish it the first Wednesday of the new month. So depending on when policy rate is announced, its transmission could take effect when a new reference rate is published the first Wednesday of the ensuing month. So since then, we've seen a 200 basis points reduction in the Ghana reference rate.
The 1st October one?
Yes.
Was it a response to the 17th MPC meeting previous data?
It was responding to the 17th September MPC meeting, the announcement, which reduced the policy rate by 350 basis points. The Ghana reference rate declined by 200 basis points, from 19.86 to 17.86.
And so there has been a response.
Direct response.
What have your members been telling you in terms of their appreciation here? Because if you engage the public, if you do a survey, it might not be scientific. From the public side, there's always a complaint that they are not seeing the banks respond. We are not seeing that being actualized or reflected in the lending rates.
I do not think as community of banks we are doing more with our public engagements and public education. There are people who they believe that once policy rate goes down by 300 or 3%, automatically lending rate should go down by 3%. There are people who have signed with their banks a fixed rate loan. And when the policy rate reduces and their rate has not changed, they believe it has not transmitted. No. If you sign a fixed rate loan with your bank, it's a contractual arrangement with the bank that irrespective of market sentiment, market happenings, I want to know that this is how much I am paying for the duration of this facility. The rate cannot change. If rate comes down to 2%, you will still pay if it is 15 or 20%. If rate goes up to 100%, you still pay your 20%. It's more or less a gamble that you enter into with your bank because of your view of where market rates are trending or potentially will trend. But majority, about a greater majority of the loans that banks have sanctioned are benchmarked to the Ghana reference rate. For those loans, they are always been reflected almost immediately after the Ghana reference rate is adjusted. It is in the system. You go and change the rate from where it was to the new rate, and immediately it reprices the loan for the next repayment cycle. The problem we have is if we are 10 borrowers and 9 of us have a flexible loan arrangement with our bank, and therefore we are seeing the benefits reflected, we will not pick a phone and call a radio station that, oh, our loan rate has declined, oh, the banks are doing well, my lending rate is now so low. But the one person who signed the fixed rate loan will now stand and then pick a phone and call into your morning shows and say the banks are not doing anything. So it is just like 10 people applying for loan, 9 getting the loan, and 1 doesn't get. Those who get the loan, they don't pick a public address system or call the media and say, oh, we have now borrowed money from the bank. The one person who did not get is the one who will make that noise. And it is our job as banks to make sure that the story is out there. And perhaps aside the central bank publication, we should also be publishing regularly the trend of particularly the Ghana reference rate.
I don't know what pertains in other markets, but again, the bit about the transparency here and the financial intermediation and what pertains in other markets, you had to take the Bank of Ghana to come out with the, what do you call the APR for people to even appreciate the real cost of lending out there. And that is where the concern about people saying that this is what has been advertised, this is what I get. Shouldn't the bank themselves would have done this, that anytime that a certain, maybe Eva Mensa signs up to a loan, this is the real cost that you're signing up to?
It is there. The loan discovery, the rate discovery is on the offer letter. It's on the offer letter. You get your
plain to document. Sometimes people gloss over in rushing to get that loan.
You cannot blame the bank for that. The bank has a duty to educate the borrower that these are the covenants you are signing on to. These are the repayment requirements that we expect you to. These are the default events. You know, if this thing happened, it will be interpreted that you are defaulting. If that thing happened, these are the processes if we have to enter into recovery. Those things are all spelled out when the facility is
doing that. Are the credit
the banks are doing it. If you have borrowed from a bank and it's not just maybe a rollover of an expired facility or it's a top-up of an existing facility and it's a new facility, your RM will call you or you talk to your RM, whoever gives you the offer letter, and their duty is to explain what is on the offer letter or is in the offer letter. Aside all these, there's a line which gives the annual percentage rate, which includes all the fees and bells and whistles that goes with the lending, to get you an idea about your full cost of the facility, what we call the APR. It's there. What the central bank is saying is that cost should be published, and that responsibility has been shifted to the central bank. So they pick the data from the banks and then they publish it. We cannot publish your loan details in the newspapers. We can't. But your APR will be different from my APR, depending on our risk profile. So to put the charge on banks to be releasing this will mean banks will be releasing individual credit information, which by data protection we are not allowed to do. And that is why the central bank takes the aggregate position and then does the publication, benchmarking the banks, so that customers can shop. If you want to borrow and there's a bank whose lending rate is now at 20%, another bank at 26%, it is the duty, consumer behavior for the consumer to be comparing prices. Just like we go to the market, it's not the first table of tomato that we just buy. We ask, then we go to the next table. Money is a commodity, just like tomato. It has a price. The price is the lending rate. So you look at the APR and then you compare. And I'm saying we just have to do a lot more. And I take the responsibility for that we may not have done a lot more public engagement, letting the public understand what is written and when they are signing the dotted line, what they are signing up to. The last time, I believe some 1 or 2 years ago, we engaged on similar platform, and I mentioned that having been within the banking system for a while,
For a long while.
Yeah, I know how borrowers behave sometimes. Once the loan is approved, the first thing is, where should I sign? The moment you do that, you are doing yourself a disservice. And the bank may take the point of trying to explain, but the mindset is on the dotted line. Where should I sign and when am I getting the money? If you give a facility to a Chinese man, every sentence within the offer letter, he will ask you to explain. If you are lucky or you're not lucky, he will bring somebody to even interpret it in Chinese or Mandarin for him or her to understand exactly what they are signing up to. We need to develop that culture. Why they do that is because they do not want to default. Their thinking is, if the interest rate I can't afford it, I will not take the facility because I do not want to default. Our average borrower from our side, I'm not saying they plan to default, but I think the preoccupation is in how am I going to pay? It is not there. The preoccupation is, where is the money? And once the money comes, all kinds of ideas emerge. And
they move away from even the core reason why they took this
making
loan.
monitoring of the facility extremely very difficult.
So, just some explanation here, or one-on-one here. So if I took a facility and it's more of a fixed rate, I shouldn't expect what has happened right now to impact me. For those who are the existing loan facilities,
you will not be impacted.
You won't benefit from all these things. If it's a variable rate, it will be reviewed.
Yes.
But also for fresh borrowers, they are going to benefit from what is happening.
Immediate.
And the banks are doing that.
100%.
Going forward, we are seeing these variables dropping. Inflation is going down. I mean, if I draw a rough scenario, inflation dropping to like 5%, if it happens this year, I mean, these are just rough scenarios. We'll see, treasury bill rates going down, policy rates coming down further to like maybe 10. Are you going to see the banks respond to all these key variables if it goes like that?
Just like we've seen, just immediate history, there is a direct correlation between or among these three key rates. It is not where inflation is today. It is the Monetary Policy Committee's view of the outlook of inflation. Okay. So if they believe that there is escalation in the risk profiles around inflationary pressures, and therefore, though it's at inflation at 9.4, they believe that inflationary pressures are elevated, it may influence their view of where else to move the monetary policy, the policy rate to. And that can have an impact on where the Ghana reference rate will also be. So it is more of how do we sustain and the consistency in the variables that we are recording, the sustainability. That is where we should all turn our eyes to. Again, 9.4 is very nice. Hooray. Are we going to see, we saw 7 or 8% somewhere in the last administration. We saw it.
Right. Yeah, you're right.
And then we saw 54%. So we have been here before. So the point should be, how do we work together to sustain this? So whatever we are doing, which is working well, the fiscal discipline, the fiscal consolidation, and all the other, tighter monetary policy stance, and all the other macro decisions that have been taken, which are yielding these results. I'm just hoping that one day, when the people who give us the ECF are not around, whether we will say, oh, now it is time.
That'll be after May 2026, actually.
2026.
Yeah,
and
May
it's just around.
Yeah,
it's just around the corner. It's less than a year.
The fund program, I'm a program will end actually in May.
Less than a year from now. So we are all watching. We are hopeful that the discipline so far will continue post IMF. Then we will begin seeing the results crystallizing in a sustainable way. The business community is not complaining about exchange rate being at 14%. They are complaining about inability to work with the exchange rate because it's 14, then it comes to 10, then it goes to 12, then it goes.
Predictability
so
more.
How do you plan? If you are a bank and you are lending, how do you plan when the rate volatility is so severe? So all we are looking for as a country is what we have is good, but what is yet to come should mimic what we have, and then the business community will be happy. Yesterday I was at a forum, the French Chamber of Commerce. I was a panel member at their forum, and exactly the concerns that they raised, the extent of the dangers that the volatility poses to the real estate sector, and the business, the French, interested business with French interests were all there, and most of them were in real estate, and they were telling us the hard facts about the direct implication of that.
In inflation, they've spoken about single digit, and we've got there. Whether we can sustain this, nothing altogether. Do you see interest rates, lending rates, if we stay on this trajectory, get into single digit? Is it possible? Is it feasible?
There's a lot more that must go in. As we are working on these macro variables, interest rates, exchange rates, inflation, and the like, we should also be working on the credit culture. We should be working with Lands Commission, Environmental Protection Authority, the judicial system. Because you see, when the financial crisis happened in 2008 in the US, overnight, thousands of houses were put on the market, foreclosed. Nobody is going to worry a bank, why are you putting my house on the market? Because the system works. If you are defaulting, you are defaulting. If you can't pay, the bank has the right to recover. Can the same thing happen in Ghana, where we see some crisis and the banks they've gone through all the rudiments of recovery? You write to the customer responds, you say to the customer, sometimes even restructure the facility, you agree new repayment plan, you give time. You've gone through all these mechanics. Customers still default. Per the Borrowers and Lenders Act, all you have to do is to notify the collateral registry and notify the courts that we are going to sell this property which was put in support of this facility. And then you go, you appoint an auctioneer, you sell. If you get more than you are owed, you pay the difference back to the owner of the property. Do we have that in Ghana? No. Banks are spending 3 years to 5 years in the courts chasing a facility. How do you expect this bank, when they are signing the new facility to somebody else, why they will be asking for the tooth of your grandmother? Because they have to cover everywhere, so they don't enter into that kind of recovery process. So if everything is hooked onto the facility, then the probability of default is now low. But does that help with economic rejuvenation?
I get from you that if the credit culture is not dealt with,
we need to work on it. And,
we won't get into that single digits that we're looking forward to.
The people who call into radio stations and they write and on social media, They are the people, even Momo, 400 Ghana cedis, they've changed their number. They borrowed 400 Ghana cedis and they have changed their number to a different number because they don't want to pay 400 Ghana cedis. If this person comes to a bank and takes 400,000 Ghana cedis, will he pay?
So when I come back, I'll be looking at non-performing loans and what is causing that and how it's impacting on this whole interest rate issue and lending rate. This is PM Express Business Edition, engaging the Chief Executive of the Ghana Association of Banks as we look at the high interest rate non-performing loans and how does it play out. The push for banks to cut their rate and drop their rate, but people are also not paying their loans. We'll be right back after this break. Welcome back to PM Express Business Edition as you look at the high non-performing loans in this country and interest rate. The push that the banks should cut their lending rates. But there's also a real concern about people not servicing the loans they take from the commercial banks. And how does it affect the cost of lending in this country? I'm engaging the Chief Executive of the Ghana Association of Banks, Mr. George Wiafe, on all these developments. Non-performing loans. Educate me this thing here. When I take a loan, there is an insurance. Why is the bank not fall on these insurance to take care of these facilities? Just educate me.
When banks give money as loans, the number one objective is to recover. Any kind of protective mechanisms are what we call second way out. In the unlikely event of default, then you fall on it. It's to the best of my knowledge, it's just, I think, it's the personal loan regime that carry this kind of insurance, because most of these people have life risk, coverage and the like, and the risk in that population can also be high. Business loans are not insured against non-repayment. Those are products that are not available.
Should we do that?
Oh, I mean, those are when the market develops. You see, and it all goes on to buttress the point I made about credit culture. Otherwise, we will have what you call in the advanced world credit default swaps, where banks can offload these kind of non-performing assets to third parties whose business is just to make them work again or to recover quickly. But we don't have them now. And the market is not ready for it because the credit environment is not good. The pillars that should enforce recovery and aid banks in sanctioning new credit are not functioning properly. And here I'm talking to our judges, our lawyers, and the state institutions. You know, you have taken collateral. By the time you enter execution, somebody shows up, I'm the owner of the property because it has been sold when you have registered the mortgage on the property. Banks go through a lot. We do not necessarily tell our story to the public about the kind of inhibitions, the problems from Lands Commission all the way to even EPA. Sometimes the credit is almost ready. You just need environmental assessment document, and that can take forever. And credit is time bound. The moment the person says, I need the thing in May or June to do A, B, C, D, and your approval process extends it to September or October, you are contributing to any potential default. Because then potentially the facility may not work in the manner that was described in the credit document. So it is important that the covenants, the pillars, the timelines are respected, not just by the banks and the borrower, but by the state institutions who have also some work to do in that sanctioning process. But in the unlikely event of default, we must have a very seamless process of making sure the bank gets the money back so that the next person who needs the funds will get access to it.
So why do you think that a lot more diligence and scrutiny can help this problem?
How diligent can you be? Let me tell you.
The credit officers doing a good job.
Let me tell you.
At the escrow committee and the credit committee doing a good job by doing a proper assessment.
We have heard of doctors. These are on the moral pecking order. When you see a doctor, you 100%, a medical doctor, you almost 100% assume that they are not fallible. They don't make mistakes. And things like borrowing and payment will come to them naturally. But do you know what doctors are doing to the banking system?
What are they doing?
Particularly those who are offshoring their services, like migrating to other jurisdictions to work.
What are they doing?
They have bank accounts. They use their bank statements. They have, personal loans. The bank will not ask you exactly what are you going to buy. It's personal loan. It's personal to you. They will come to a bank, take let's say 120,000, 150,000 Ghana cedis, take visa and jump off and leave the loan hanging. Wherever they are going, they are working there. They are earning. And one would think that as medical practitioners, they would just say, I have a liability in Ghana, which enabled me to demonstrate that I can fund my travel. So let me come and settle. About 70% of them are not paying. These are medical doctors, people we hold in high esteem, to the extent that at some point we're even attempting to write to the embassies to seek clearance from banks before they allow visa process. No, I mean, but there are processes we are going through the Ministry of Foreign Affairs to ensure that the diplomatic corps, you don't just wake up and write.
But I'm saying this doesn't just come today. It's been a long.
There's something that but
are you going to move soon?
We've already there's a letter that is logged at the Ministry of Foreign Affairs, which is trying to achieve that. But that is a reactive mechanism. But what I'm talking about is when you talk about the pecking order of moral levels, who are the people you respect in our communities?
Medical doctors.
Medical doctors, they are up there.
Lawyers.
And if they are not paying, deliberately refusing to pay, it tells you the kind of culture we are building as a country. So then a journalist comes, the doctor has defaulted. A journalist is there, who say, hey, in our society, of course, journalism is very important. You're doing a great job. But we know that doctors are seen like some angels, and they are doing this to us. Then they'll be asking you questions that you do not deserve because your credit history is perfect. I'm just using this simple analogy. Forget about the profession that I've mentioned, but I'm using it as a simple analogy to demonstrate that inherently we have a pension to default.
So, well, I asked this question because this is not the first time. If every 100 cedis given out, 20 Ghana cedis will not be paid back. Industry of about 20%, 21% non-performing loans ratio, that is quite high. Some are saying that maybe this is the time for certain drastic measures to be taken. And if it's not only that profession, there are a lot of individuals who are taking loans and they run away from. And that is why a embassy would ask you for your bank statement. It should go beyond to also assess your credit culture as well, or your credit worthiness. What is stopping the banks from moving fast to ensure that? Because there's an impact of not paying your loan affecting a good customer out there assessing a fresh loan from the bank.
Of course, and I said the step has already been taken. But these steps, it takes two to tango. You've written to the Minister of Foreign Affairs. I think just when we were about reaching some level of understanding on how we are going to work around this, there was a change in government. New minister came. He had to find his level. This is not technically his priority area at the moment. He has very, very critical things on his table around, national issues, which he's working on. So we've written again, and we are just hoping that we can have some traction on it, because we cannot just wake up and begin writing to embassies on what we are doing. Individual banks can say, unless clearance or something, maybe, but if you do it individually, it may not have the messaging effect to the public that we are expecting. And it's not just doctors. We have the nurses. We have the artisanal migrants, people, carpenters, masons, plumbers who are also living, some going to Canada, the US. They all come to the banks. They pick their statement from the bank, sometimes with a loan balance sitting on the statement that goes to the embassy, and then they have this money. They come. It is possible they use the money. Some use it to settle their families back home while they are away, and then they use some to buy tickets for their initial stay expenses. And so the bank has really facilitated your career move. The most legitimate thing to do is to look back and say, now I have a job which is paying 3-4 times what I was earning in Ghana. Bank, how can I make payments? No longer working where I was working. What new arrangements can you put in place to receive my payments? This is what your other borrower in another region where we compare our lending rates to, that is what they will do. That is what they will do, because default is a no-no. When you default, you are an enemy to the financial system, and the financial system will punish you. But here, when a bank lends to an individual, they are just lending to the individual sometimes almost blindly that, oh, you are working here. It's a tier one, employer. We hope, we trust that when you are leaving, we'll be informed, your benefits will be paid to the bank. But we do not have visibility on other debts if you do not disclose to us. We ask that if you do not tell us that you owe on your rent or you owe school fees, elsewhere, all those things are part of the credit decision making. It goes up to build your risk profile or your credit profile. So we can properly distinguish the good guys from the bad guys and not use one paintbrush to paint everybody and say, oh, risk premium 5%. When somebody's risk premium should be maybe 0.5%, because there's definitely not going to be a default on his watch. So there's a lot that must go into building the culture. Off the set, you were talking about even friends you have who may have taken, sometimes it's not too much money, who are not calling you anymore, or when you call are not picking. They are the same people who come to the bank, so they have bank accounts. So your MPL level could be higher than the bank's MPL. You are not assessing it properly.
I mean, Mr. Wiafe, you talked about all these credit conditions coming in to help. In terms of the Credit Reference Bureau, has it been that helpful, or a lot more needs to be done?
It's helped, but a lot more needs to be done. The next step is credit scoring. What we don't have is credit scoring. And I know of a company that is trying to come up, My Credit Score.
My Credit Score,
trying to come up with a scoring regime so that you can go and show a bank, this is me, this is my credit score. And therefore, when you are lending to me, this is my risk profile, the 360 view of my exposure within the country. That is the next level. When we go to that next level, where your entire risk environment or ecosystem around you is captured, your kids' school fees, if you are in arrears, is captured. Your rent, if it's in arrears, is captured. You've gone to buy fuel, you have not paid, is captured. Everything, suppliers' credit, it's not just for at the individual level, business level. You are an oil company, you buy from a trading business, you have not paid, though you don't owe the bank, you owe a supplier, an oil trader, or you sold to an OMC, or you bought lubricants. All those things are embedded within your assessment or evaluation. So the bank is able to have a 360 view of you. When the bank is lending to you, then they can say, Mr. George Wiafe, based on our evaluation, though the Ghana reference rate is at 17.86, your lending rate is 15%.
You have also written off a quite significant number as well of these debts, and some are saying that it is hurting a lot of your members with respect to these high non-performing loans.
Of course, I mean, it's cancer to the balance sheet, to your P&L and also to your balance sheet. But one point I have to make very, very clearly, when a bank writes off a loan, they have not forgotten about it.
Tell me more about that one.
You understand? They take it off their books, but the recovery process is even more stringent on written off facilities. Write-off is, probability of recovery is very low.
800 and something million for last year, I tend to be correct.
Yes.
That's huge.
Yes, it's big, but it is possible that if we give to a third party whose focus is 100% on this loan, he will be able to make a recovery for us.
Be doing that?
Or banks are doing that. There are credit, companies that are credit recovery companies in the country. There are many of them around, where banks are selling off or employing us on contract basis to recover on success fee basis.
Mr. Wiafe, at the association level, what has been the engagement also with government, the Ministry of Finance, the Ministry of Roads? Because when you engage some of these businesses, the argument is that we did a transaction for GOG, Government of Ghana. GOG as an entity or as a company hasn't paid me, and that is why I'm delaying in servicing these loans. What has been that level of engagement at the association level with the company called Government of Ghana for some of these debts to be paid?
I've even written personal letter to the Minister for Finance on the banks that participated in the 1D, 1F.
Yeah.
And when the plugs were pulled, they are found wanting.
Yeah.
And that is one big problem that this country we are facing, and which is also worrying banks' ability to support government programs. Now, if a bank is undertaking a government program and is transcending an election cycle, then they take a step back to look at it critically. Because it is possible that another sheriff comes to town and says, oh, no, this program no longer a priority, we are bringing a new program. Meanwhile, that program, which is no longer a priority, has been funded. Yeah. And that bank that funded it needs to be paid. And this kind of back and forth and secular reference of project, rejection and project withdrawal, and it doesn't help the credit environment again. It doesn't help because a lot of the banks, gave money under the 1D, 1F, which was a government program. And government is government. Governments go, government come, country is there. So one is expecting that, yes, there's a shift to 24-hour economy.
Now I was coming to that because that's another program that government is seeking your support to finance.
Yes, but the banks that have already been exposed in the 1D, 1F, we will ensure that that support program moves on, and then you get your recovery, the businesses work, and then you get your recovery. But we also expect you to support the 24-hour economy program to make it more successful, because you need a funding mechanism. And from my understanding, having listened to the coordinator or the director, Mr. Guzitando, I was at the presentation at Bank of Ghana. Right? It is a very fantastic program. But you need a funding mechanism. But if you are a bank, you want to support, but you are also asking yourself, the what if?
So how are you working to resolve that issue? Because as you told me earlier on, you're engaging the sector ministers to see how these things are financed, because that also has a bigger impact on these high non-performing loans. So
I'm happy you have asked this question. And here I'll appeal to the finance minister that when the banks write, they mean business. When there's something hurting the banking industry and we write, we expect response. We expect some level of engagement. It's been 9 months. We've had one meeting with the minister. We are hoping that we can get more regular, because the last time we met him, it was a very good meeting. And he himself confirmed, Honorable Atuforsin, that this is a fantastic meeting. John, how can we make this a regular feature? And I was thinking that maybe every other month, or even, at the worst case, every quarter, just like we meet Bank of Ghana bi-monthly, maybe every quarter, the fiscal side too, we meet, and then we can talk about how we can facilitate the execution of government programs. Then we can talk about, there's a big push. What can banks do to push it? There is 24-hour economy. What can banks do? Where do we plug in? How do we get the certainty around repayment? And the ones that we have already funded under the previous government, these are the steps that this government is taking to ensure that no bank is left behind. Because it is capital that has been deployed. That capital has to be restored. And we cannot be transiting between governments. We do not know government picture. We know government of Ghana. Faces change, but the government is the machinery. And that machinery must never end. And that is what we are not seeing, and potentially can impact how banks respond to other fantastic programs that are in the offing. So, it's early days yet, and I'm hoping that we can get some solution to the 1D, 1F outstandings, and banks can rally around and also facilitate execution of the 24-hour economy.
I don't know whether the Bank of Ghana wants to move in quickly to help in respect to this NPLs or non-performing loans issues. they've come up with some proposals. I mean, blacklisting if a certain George Wiafe is what they call a recalcitrant defaulter for 5 years out of the system. Also certain things that have got to do with the financial reporting from next year. What do you make of all these proposals that have been put on the table by the Bank of Ghana to try and help deal with these non-performing loans issues?
They are very positive, and we have received them very well, but they are reactive policies. But what we are talking about is how can we be more proactive to stop the non-performing from happening in the first place. So there's a lot that the central bank is working with the banking sector, I mean the industry, to correct. You've seen the directive on the large exposure.
Yeah.
There's a new risk framework that is also coming up. So the central bank is very committed to cleaning up the credit environment. But it takes more than Bank of Ghana. The Judicial Service, which is an arm of government, must also act. We need other state institutions. We have the SIGA.
Yeah.
These other state institutions are under SIGA. They should also be interested. How is Lands Commission? How is EPA? Ghana Standards Authority? Ghana Food and Drug? How are they also facilitating the smooth running of credit within the banking system? Because it is not about banks. It is about the economy. We need the economy to be oiled. How do you oil the economy? You need funding to translate into cash, to come back into taxes, to come back into operations, to come back into taxes, to come back into additional funding, to come back into employment, pay as you earn. And it is endless. The cascading effect of proper financial intermediation is endless. All we have to do is to enable the mechanism that ensure smooth running of the financial system. Insurance products to support the banking industry. We are saying banks should go into agric, but you don't have any kind of product against post-harvest losses. So if a bank funds a greenfield agric project and through no fault of the farmer, through no fault of the banker, there's post-harvest loss. They couldn't cut the goods because there was heavy rains and the entire tomato harvest is gone. But that harvest has been funded. Do we have products, insurance products, that protects the bank and depositors' money from getting lost? You know, post-harvest insurance, we have a crop failure. You know, the farmer would have done everything, but the crop has failed. But the failure has been funded. How does the bank get the money back? So it is very easy to sit on high horse and say banks lend to agriculture sector. But the banks are also trading with people's money. So they will go to the agriculture sector with their eyes open. That are the chains properly connected? When there is harvest, you know, the commodity exchange, is it functioning properly? Do we have proper warehousing receipting system that enables banks to ensure that, as they are funding the commodities, there is some documentation that enables them to make recovery? We need a lot more end-to-end. As a country, we like scratching the surface. We like talking about the symptoms of our problems, but the underlying problems, we don't. That's the heavy lifting. The one that to create the structural change, so we do not get to discussing this kind of issue we are discussing for almost 1 hour now. We'll be discussing how much more loans are you giving to manufacturing? How much loans? This Accra Kumasi Highway, how many banks are syndicating to fund that infrastructure? That is what this discussion should be about. If the environment... No, I mean, what you're doing is right. But the point is, we are talking about this because of the systemic problems we are sitting on, and the resolution has been very slow.
Mr. Well, I mean, some have made several arguments with this and all those things. For you, do you think that even though some would say that these measures are good, I engage some businesses out and they say that, George, I mean, nobody wants to be indebted to the bank. Sometimes government is not paying us, sometimes our monies are lost somewhere. These measures that are being introduced, are we not going to get into that corner where we now be struggling to get people to lend to? Because these things are quite strict, banning people who are recalcitrant borrowers for 5 years, you know, and all these things, they are good in principle, but also the reality on the ground.
Yeah, that's true. But the point is, when we talk about the credit environment, we are not taking out government.
Okay.
Government is part of the.
Because I see the numbers that in terms of exposure to government, it is coming down.
Who said?
I'm saying in terms of total exposure.
Yeah, of course. I mean, the thing is, now there are banks who will say, is it GOG? Oh, okay, then, appetite is low.
Back.
You understand? But we don't have to, because GOG is 67% of the economy. How do you take 67% of the economy out of your funding structure? We need to have a way of getting government to pay its debt. And those debts include debts that are owed to contractors, debts that are owed to service providers who have provided services to the government. Because these people took money from the banking system to be able to deliver on those services. So we need those structural hiccups to be removed. And so we are talking about credit culture. What the Bank of Ghana is doing, helping the banking system to clean up the environment. I'm not sure they are just targeting banks. They are targeting the country. And a bigger chunk of the country is run by the state in terms of its exposure to the credit system.
Is there about the bit about the blacklisting? Has it already started?
It started.
Has some individuals been blacklisted in terms of that 5-year thing, or is yet to be rolled out fully?
No, it's done. I mean,
so
Central
some
Bank
people have been.
I think the name you saw, the publication came in the papers, and you saw them.
So some people are being blacklisted for being recalcitrant defaulters.
Of course, I mean that's the directive. So if you are classed as a recalcitrant defaulter, then your access to the financial system is limited.
This is PM Express Business Edition, engaging the Chief Executive of the Ghana Association of Banks as we look at the non-performing loans issue and the push for the commercial banks to cut down their lending. When we are back, we look at the bit about lending, total lending as well. How's the outlook like and other regulatory issues? This is PM Express Business Edition. We'll be right back after this break. Welcome back to PM Express Business Edition as we talk about interest rates, non-performing loans, and those who are not paying their loans, and how we get around this challenge. Engaging the Chief Executive of the Ghana Association of Banks, Mr. George Wiafe. Looking at the loan book of your members, are we going to see some good credit going forward? Because all these challenges, high non-performing loans and all the rest, the banks are going to be more extra cautious going into the last quarter of the year and even next year.
It all depends on the economic circumstances of the country, and the progression that we have had so far, I think it's a positive sign. I've said many times that the cost of credit is also a contributor to the default that we are seeing. If you borrow at 35%, what kind of business are you running to be able to return sufficient money to finance the borrowing cost? So if we can have an affordable, credit environment like we are seeing, where the lending rate is trending, downwards quite well, then the probability of default is likely going to also subside, and that should translate into a reduction in NPLs. As it is, over 20 billion Ghana cedis is locked up in non-performing loans. That is 20 billion that is not available to the banks to do financial intermediation. But the depositors who own that 20 billion, when they come, they will need their money back. So you find where the banks are sitting. 20 billion is locked up. We don't have access to it. And we need that kind of funding to come back into the financial system to help the intermediation to continue, and also to ease the pressure on the sanctioning agents, like the risk teams and even the originators. So I said, in the early part of the interview that we are all hoping that the kind of progress we have made this year is sustained into the long term. If it's sustained into the long term, then it's potentially going to have that direct impact on the lending.
Sustained to next year. Let's next year. We're going to see.
Next year is not enough. Next year is enough.
We are
maybe medium term, 3-5 years. Because you see, when people come to the bank, they are not borrowing 1 year. They are borrowing beyond 1 year cycle. They're borrowing 3 years, they're borrowing 5 years, some want 7 years. Now people are demanding 10-year facilities. So if we can only put our ass together for 12 months, and then the next 12 months is uncertain, then what kind of signal are you sending to the bank that is sanctioning a 3-year loan today? That, oh, we can only guarantee that what we are having will be there for 12. No. That horizon is too short. And that is where we should push the managers of the economy to think beyond the IMF program. That whatever we do beyond the IMF program will have a direct impact on the variables we are seeing trending downwards today.
Mr. Well, I mean, as we try and wrap up on this discussion, one would ask that what is the current state of foreign exchange supply to aid your FX dealings, trade and transactions, having at the back of our mind that the Ghana cedi is the medium of exchange and the medium of doing business? Has the situation improved right now in terms of interbank trading? I've seen some liquidity movements and all the rest. Is it better now, or it can be better?
I would say it's better. And we thank the governor for the announcement that was made yesterday morning. The market has already started pricing the announcement effect, even before it's translated into action, into the rate. You saw that the rate almost immediately started coming down. It means that the market is getting efficient. The market becomes efficient when new information triggers pricing decisions, and those pricing decisions reflect the information, the load of that information. So with the new announcement and the new guideline that the central bank has brought in, and also the decision they have taken on the net open position, where the long position is now 0, which means as a bank, the central bank is not expecting you to come for auction, take forex and keep, expecting that rate will take a certain direction and then you sell. No, you take forex from the market or from central bank, and then it's being offloaded to the customer who needs it. That should improve supply to the economy, and the supply should then suppress any kind of speculative decisions or people who want to take advantage of temporary price differentials. And once that goes away, we will find an immediate squeeze or convergence between the rates within the official system and the parallel market rates. Once that convergence is reached, we are going to have a very, very concrete, stable currency, stable cedi. Because then, for those who want to go and play in the parallel market, there is no motivation. You can't come to a bank and withdraw dollar and go and sell in the black market, because when you go there, the price differential is not available, and there's a price you pay for withdrawing when you did not put cash for withdrawing over the counter. And also, the banks, through the support mechanism from Bank of Ghana, we heard that weekly auctions in the spot, not forwards, in the spot market of $300 million is very welcome news. And I'm excited that the market has already seen it, and we are seeing the impact on the rate movement.
So, I mean, these regulatory actions and measures in consultation with you, the commercial banks, they have impacted on supply.
Of course.
FX, interbank trading and all the rest.
It's always been a demand and supply, except that the active demand, it has been very difficult in assessing what the active demand is. Is this demand the real demand, or there are people who are just demanding in order to play on the currency? If the supply side improves, then we will find supply and demand reaching a sense of an equilibrium. And the impact of the shortage in supply on the price decisions would then suppress. And with the promise of weekly auctions in the spot market at least twice in a week, we are going to see an improved supply to the market. And also the decision on the NOP, where the short position is now -10 and the long position is now 0, it means that banks are going to now offload. If you have FX, you are assessing the implications on your open position, and you are looking at the regulatory requirements, and you are reporting on this to the Bank of Ghana on a weekly basis. So you cannot keep the currency. You just have to offload to the market. And that should improve the supply in the country.
Do you think that they will also deal with the speculatory that has been a major reason for the pressure that we are seeing on the city?
The key driving force for speculation is volatility. So anything that you can do to take out volatility will then immediately impact speculation. And one way of dealing with the volatility is to improve supply. And now this action will improve supply, which should then reduce the volatility. And once volatility reduces, you will not be paid, and then you want to change some of your CDs into dollars because to store as value. And the dollar cannot be a store of value in a CD regime. The only legal tender in this country is the Ghana CD. Again, the only legal tender in Ghana is the Ghana CD. So if you are paid and you don't have any need for dollar and you are looking for dollar to buy, you are perpetrating fraud and crime. And I believe the system should fish you out and punish you and use you as an example to others, so that we all stop this pressure of fulfilling prophecies of CD will depreciate, and then we go and buy dollar to put more pressure on the CD, and it depreciates, and we say, oh, we said it will depreciate. Then it's like it's a self-fulfilling secular referencing of prophecy. And that is what the central bank, working with the banking system, is trying to avoid. And my wish is that through this process, we can wipe away the black market, and then the transactions will come through mainstream banking. You get proper price discovery, and then we'll get where the rate should be, and it stays there within some allowable constraints. Then we are in
Did
business.
you see that going forward based on all these things that are being done? That we'll see the blip,
we are
which is
monitoring.
normal for every
We are
market,
monitoring.
you know?
The decisions that have been taken in the last few weeks have been very positive. And I think they have been forward-looking. And we believe that those decisions will translate into the outcomes that are expected to create and reduce the volatility within the currency, create a stable regime for a while, because that's appreciation
was too much.
is not what the business community is
and that
looking
would
for.
impact on the city's performance going forward as
yes,
well.
we have strong belief in that.
For those genuine businesses that are doing genuine FX transactions backed by documents and all those things, they are getting supplies when they come to you.
So of course, yes. I mean, that has never been out of the question. The people going to the black market are people who do not want to go through the rigor that the banking system will take you through. Because you cannot come and say, transfer $500,000, and the bank will say, send an email, and then $500,000 is transferred. No. You have to tell us what you are going to buy. You bring your import declaration document. We look at it. When the goods come, we match your IDF with the goods that have come, that the values that we paid for are the values that are on the goods you are clearing. People don't want to do this. That is why the black market is flourishing. But if the black market is closed and is squeezed of further supply, then you'll be forced to do the right thing by coming through the banking
So how are
system.
you tightening the rope? Because recently there was a report that said that some people took money from the banks going to do import or export. They didn't do that, and some investigations are going.
We've always had the challenge of loopholes within the customs system, where a bank will finance an import of, say, $50,000, do what we call advance payment for $50,000, and through some funny means, the import declaration form, which supported the payment of the $50,000 to the supplier, maybe in China, when the goods are being cleared because of under-invoicing, the goods that come is $20,000. But we paid for $50,000. But because the IDF will show the discrepancy, they find a way of issuing new IDF to clear the goods at $20,000. Then it's left with the bank hanging. Bank of Ghana comes and says, give me the goods you imported, the documents that show that the goods came, and then you go and pick the document, it's 20,000, but you finance 50,000. We are working with JRA and the, is it Ghana Online or the ICAM system?
Right.
There's an upgrade that we have proposed, working with Bank of Ghana and JRA together, that the JRA will have to approve for ICAMs to do, so that if you use an IDF for an importation, that IDF will be the IDF you use throughout the process. If you want to make an amendment, maybe you paid for 100,000 and the goods that are coming is 70,000. You make it on that IDF. Then we know that on that IDF you still have 30,000 to supply, and you cannot. And that should also help not just the banking system, the importer, and also customs, because it will improve tax collection or customs.
So as you try, I know regulations are regulations, but if what we have been seeing is anything to go by. We are seeing that stability, things are improving. Some of these extra restrictions that the banks put in accessing FSB be waived a little bit, or listen, these are regulations, they will never change.
I mean, I believe regulations are regulations.
But some are internal things the banks do in trying to access the effects from the
over time, given history of performance, regulations and directives and policies are supposed to be reviewed. As they are reviewed, and we find that people are now self-complying, why do you put impediments when people are willingly doing the right thing? I'm sure the banks are legitimate and very sensible business, is a sensible business community, and they will do the right thing if the circumstances are right.
Mr. A friend of mine asked me to ask you this question. When are all the banks going to come back fully on board to Saturday banking?
It's demand and supply. If there is a demand, the banks will open for Saturday banking. There is no law that is banning any bank, but obviously banks have taken a second look at the traffic in the banking hall on the Saturday, maybe 50 people. I mean, would you open the whole branch, air conditioning systems working because of 50 people, when there are alternate channels that they can do their business? So banks are always on the lookout, but there are a lot of Saturday banking branches around, so you can.
Because I've checked on certain banks, not to mention any names here, that they used to do that. They are no longer doing that.
But we are mentioning one bank out of 23. So
these are two banks.
And two out of 23.
Okay.
Yeah.
This is PM Express Business Edition, engaging the Chief Executive of the Ghana Association of Banks, looked at the interest rate and non-performing loans. I know that debate will still go on in your homes and offices about how best can we deal with this challenge to ensure that anytime you walk to a banking hall, you can get access to the loan at a very favorable rate. This is PM Express Business Edition. Have a great day.